Welcome to the Fellow Investor. Today we unravel the story of the Bretton Woods Collapse, the day the dollar broke free from gold. Imagine a world where every dollar was as good as gold. Then one evening, a single decision shattered that system, forever. This is the story of how the most powerful financial system ever created came crashing down. From the ashes of the Second World War, world leaders built a new global economy, stable, secure, and anchored to gold. But by the 1970s, that system would unravel, triggered by war, debt, and a fateful speech by one American president. This is the story of the Bretton Woods Collapse, and how it changed money forever. Let's go back to July 1944. As the Second World War neared its end, 44 Allied nations met in a small town called Bretton Woods, New Hampshire. Their goal: avoid another Great Depression and rebuild the world economy. The solution: peg all currencies to the American dollar. Fix the dollar to gold at $35 per ounce. The United States would guarantee convertibility. Anyone with dollars could exchange them for gold. Why the United States? Because it held 2/3 of the world's gold reserves after the war. So began a global gold-backed dollar system, predictable, stable, and trusted. For 2 decades the system worked. Economies grew. Trade boomed. The dollar was king. But by the 1960s, the cracks began to show. America was spending massively. The Vietnam War, the space race, and Great Society programs. To pay for it all, the United States printed more dollars, far more than it had gold to back. Foreign governments noticed. They began exchanging their dollars for gold, draining American reserves. By 1971, America had over $50 billion in dollars abroad, but only $10 billion in gold. It was a bubble of trust, and it was about to pop. On August 15, 1971, President Richard Nixon addressed the nation. "I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold." But temporarily became permanent. This act, known as the Nixon shock, destroyed the foundation of Bretton Woods. Now, no currency was backed by gold. The American dollar became fiat, backed only by faith in the United States government. The consequences were swift. Gold prices exploded, from $35 to over $800 in the next decade. Inflation surged, leading to the stagflation crisis of the 1970s. Oil prices quadrupled, triggering a global energy crisis. Currencies now floated freely, leading to volatile markets and forex trading. The world had entered a new financial era, one where money wasn't tied to anything physical, just promises. Today, over 50 years later, we still live in the post-Bretton Woods world. A world of fiat money, massive debt, and endless printing. Some say it gave governments flexibility. Others say it unleashed inflation, bubbles, and financial instability. But one thing's clear. When money is no longer tied to gold, it floats on trust, and trust can break. In the 1980s, the United States had less than $1 trillion in debt. Today, it has $37 trillion, with debt growing faster than economic growth. It seems we are heading toward a similar situation of 1970s stagnation. Was ending the gold standard the right move, or the start of an economic time bomb? Let us know what you think in the comments. And if you enjoyed this dive into financial history, like, share, and subscribe to the Fellow Investors.